There's double Dutch and then there's Treasury Dutch. Who understands anything the National Treasury says? Anyway, there was a retirement reform, change of mind under pressure from unions, and then there's the postponement of transfers for tax-free savings accounts. Now, why do we have these postponements? This is the MoneyMakers. I'm Bruce Whitfield. Tonight, I'm talking to Chris Axelson, who's Director of Personal Income Taxes and Saving at the National Treasury, about the changes that have come to bear on the, what they call TFSs, tax-free savings accounts. The tax-free savings accounts, 15-month-old process. The first year, the first contributions closed off at the end of February, and you were supposed to by now be able to move from one product provider or from a current account sort of structure or a fixed interest structure into a share portfolio, but you can't. Why not?
Well, at the end of last year, probably the latter half of last year, we met with service providers to discuss exactly this. How can we get this transfer process going? We've been quite strong that we want transfers to take place. We want increased competition amongst the service providers, and we want increased choice amongst those who are willing to save in these tax-free savings accounts. In that workshop, it was quite a mixed sort of view. I think everybody agrees that transfers should take place and they're in the best interest of everybody, but it's more on the administrative side. How exactly does this happen? What needs to take place for this to happen? So a lot of, some of the service providers are very used to this. They deal with a lot of transfers on a day-to-day basis already, say with asset managers or in some of the retirement fund industry. For other service providers, they don't deal with this. And the new aspect here is that now not only are you dealing, say, within asset manager to asset manager, now it's, say, from a stockbroker to a bank or a life insurer to a stockbroker, or so there are a whole lot of new players involved, and it's sort of the first time that they're really in a big room together saying, okay, how are we all going to work together on this? So it's not something we are trying to step away from. We just want to provide a bit more time for everybody to get their ducks in a row. And at the same time as we postponed it, we published new draft regulations a couple of days ago. And those draft regulations spell out a bit more of the detail, and then hopefully we can meet with industry again and we can finalize by November.
Okay, so by November, say I've made a bit of a dud investment. I decided I was a bit wary of the stock market. I really should have just put it into a particular unit trust style tax-free savings account. I put it into a fixed interest savings account, and I'm a bit cross with myself. I've got to wait until November then to be able to do that.
Well, it depends. So if you were at a service provider that offered a tax-free savings account, say in a stockbroker that you could choose the different types of products within their stockbroker already.
I could just flip into another one of their products.
So at the moment, there's no restriction on the type of products you can have within one service provider.
Okay.
So you can switch from fixed income to equity ETFs if they offer it.
Yeah.
But if you wanted to move from one service provider to another, because let's say you're worried about the costs, that's really what we've delayed until November.
Or the CEO drove over a puppy or something, and I was a bit grumpy with him. Whatever the reason was.
Yes.
So there is a delay on that particular front. But are you satisfied with the uptake with these tax-free savings accounts? Because it was all lots of hype and lots of excitement, but it feels like quite a muted response by the South African public for them.
Yeah, so we've had quite a lot of, we haven't had a lot of push from government as itself in terms of advertising. We've really left that up to the private sector. We think a lot of the private sector players have done a lot of advertising and have tried to get the message out there. Minister Gordhan, in his budget speech, mentioned that we had about 150,000 new accounts that we know of, and about 1 billion has gone into these accounts. And that's really just surveys, it's anecdotal evidence. When SARS get the returns, because every single individual will have to have a return submitted to SARS on their behalf. When we get those numbers, we'll really get a good fix on how many people have actually opened accounts. But we think it's a relatively good take-up, and we'll just have to see as the data comes in. But we think it's a good process, and hopefully it can continue to grow.
The fact is that there's R1 billion worth of money that might have been saved elsewhere, or whatever the case was, but people are prepared to take the opportunity of getting a tax-free return over the lifetime of a product, and that's a really good thing. There were also concerns about fraud and all of that sort of stuff, and people opening up accounts in dogs and cats' names, and children and elderly relatives, but there hasn't been any noise around that.
Well, it will take a bit of time for us to get into all of these things. If people are doing that now, we wouldn't really know until the IT3Ss, which are the returns that SARS receive, start coming in. But SARS are excellent, and they will take an active look at this, and then they will just apply any measures that are required if they see that you are doing anything that doesn't quite conform to what the spirit of this regulation is. So we really would rely on SARS and how they deal with that. But there are provisions that if this really isn't, you are doing it just
to dodge tax.
You know, then there are provisions in the legislation which say that no, that income should actually be taxed in your name.
Yes, and you shall be nailed. The one thing that SARS does enjoy is nailing recalcitrant taxpayers. Now, also one of the criticisms, the early criticisms of these accounts, and I hate the name tax-free savings account because they're not accounts. I mean, that was the original account's a bank account. These are investment vehicles or portfolios or whatever the case might be. Was that actually it favors, even though there's a maximum saving of 30,000 Rand a year, it actually favors the wealthy rather than the poor. Is there nothing we can do from a savings perspective to give people who've only got $5 a month, just to put that $5 away into some kind of vehicle? We tried those dreadful Mzansi accounts, which I think have all but died by now. Is there an option? Is it something you're looking at?
I mean, I think it is. It's difficult when you're talking about tax incentives. You know, the only people who benefit from tax incentives are people who pay tax.
Yep.
So if you're earning more than 75,000 Rand a year, those are the only people we can target through these tax incentives. I mean, I think we tried to move in some areas of the tax system to cater more for low income individuals. So for example, I suppose medical tax credits as well is only if you pay tax. But we certainly are looking at these other things. I mean, the way you would do it really in other countries is co-contributions. So if you put in, which is a little bit like those Mzansi accounts, you put in 10 Rand, we'll give you 2, or that sort of thing. The problem with those are they're expensive. I mean, it's money out of the government's coffers actually putting into those accounts rather than in tax incentive.
But it's about betting on the future, isn't it? I mean, and it's a case of creating a savings culture. So you might only be earning 50,000 Rand a year now, but who says that you're not going to be earning 500,000 Rand 10 years from now? In which case, if you've got a savings habit, you're making a positive contribution to the country's savings.
Yeah, I mean, it is definitely something we're looking at. I mean, we're trying to, savings are a problem. We know it. Everybody knows it. Household savings rate at 0.1 or so. So we trying to just look at all the different ideas and see what we can do within the fiscal position that we are. We're just going to have to, I suppose, be more creative. Hopefully this tax-free savings is a start though.
Yes.
So it really is a shift from the interest exemption, which nobody even knew about, and was it really doing what it needed to these sort of unique accounts, which hopefully get a bit more exposure and have some unique features to try and get people to save. So it's a shift at the moment, and then anything new, I suppose we'd really have to think about.
No, and you've got to have an income to be able to save anything, and then you've got to have some money left at the end of the month, rather than a month left at the end of the money in order to have something left to save. Very few, I mean, as a proportion of South Africa's population, very few people have gotten any money at the end of the month to save. Many people are surviving on payday loans and all sorts of other dreadful monstrosities in their daily lives.
I mean, it really does come down to that, and it's a tough thing because we always go back to growth and employment. I mean, if you don't have employment, how are you supposed to save? And at 25% unemployment, or 24.5 now, it's a huge problem. And I think lower income individuals and lower income countries that struggle with this unemployment, on the same hand, struggle with savings, and it's really difficult to get that savings rates up to then transfer into investments and improve growth. So we're sort of in a catch-22, which we've got to try and solve.
But again, it's the first step in a process, and there is an uptake, there is an interest. Everybody loves a bit of a freebie, and having a return in 20 years' time that's tax-free is an attractive proposition.
Yes, it is, and we really hope so, and that's what we're trying to push. I mean, no tax on capital gains, no tax on interest, no dividends tax as well, which a lot of people don't realize, because we don't have a dividends tax exemption at the bottom end. So anybody, even if you do save 5 Rand, you would pay dividends tax on that.
I mean, that's important. So within the tax-free savings structures, then your dividends tax exempt. So there's an extra kicker, 10 or 12% then?
Yeah, 15,
15% on the dividend portion of your reinvested income, which is incredibly positive.
Yeah, and we hope that's enough of an incentive, even for individuals below the tax net, because they would all pay that.
Okay. I mean, again, it's a hard sell because the language is exclusive. It's a tough sell, and also you've got a fika. Yes. I missed the deadline because I just hadn't got around to fikaing kids and stuff, and you just go, missed opportunity. But it is a case of the product providers have got to be able to make money out of it to make it worth their while to market it. So we are in a bit of a catch-22 because government very, very making life difficult in terms of the sort of fees people can charge too.
Well, yeah, I think we haven't been overly prescriptive on the fees. So we didn't allow performance fees for various reasons, but we haven't been overly prescriptive on the other types of fees that you can charge in the accounts. So it is, we do need to be in a middle ground where we want service providers to offer this product, but we want the product to be suitable for the vast majority of people and to be good value. So in the original regulations, we've got lots on the product being simple and having lots of diversification within the product, so that it's not too high risk. People won't put all their money into an African bank and then suddenly blame government because it's a government-sponsored scheme, etc. So we've got a lot of those requirements that we hope will be attractive to all types of savers, and we think that they can be good value for service providers, especially
Are they in the ETF space as well?
Yes, definitely. So,
because from a cost perspective, I mean, yes, you take market volatility as it goes along, and you don't have any active management. But from a cost perspective, the ETF or option is you get the benefit of low costs plus then the tax-free gains on it, and it suddenly becomes quite an attractive proposition.
Yeah. So if it's a registered collective investment scheme, which most ETFs are, a few of them aren't. Say the commodity ETFs, but the registered ones, it can be certainly be included, and there you got immediately a low-cost, fully diversified. Sort of asset to hold on to within these types of accounts.
You'll have a lot of people watching this because they've got big DSTV accounts and they drive big cars. They're watching us tonight going, this 30,000 Rand a year just isn't enough. What are the prospects for that upper limit being raised in forthcoming years?
So we have mentioned in our previous statements that we would increase the value to take into account the impacts of inflation. We haven't put that into law. It's not an automatic increase, so it would be done on an ad hoc basis.
Would it be? It wouldn't be an annual review. It might be a 5-year review, or whatever the case. In the same way as capital gains on portfolios is looked at, in the same way as transfer duties is looked at every 2 or 3 years in the budget, for example.
Exactly. So we didn't increase it this year at the budget, but it would be up to the minister when he would. But we have put forward our intention that we would increase it over time. We weren't going to increase the lifetime limit because it is the lifetime limit of 500,000. And I mean, going back to your point on, this could really just be for the higher income individuals that benefit from this. I mean, that's why we've got that lifetime limit. We don't want, and also why we have quite we enforce a lot of diversification within the product. So someone who's wealthy can't put a 1 in 100,000 bet on a tiny share that goes to a huge amount, and then they get all the returns on that tax-free in future. So we've got a couple of limits that we can try and limit the benefit to the very wealthy. But we think 30,000 is a good value, and we'll take it from here and increase and do analysis as the data comes in and see whether we need to adjust it.
Well, it's a fascinating world. Chris Axelson is the Director of Personal Income Taxes and Savings at the National Treasury. The tax-free savings accounts, of course, the first deadline passed at the end of February, but you can do a direct debit. Just get into the habit of saving, of course, and if you're not doing it for yourself, do it for your kids, or maybe somebody else's kids, like mine. I'll give you their bank details. There'll be National Treasury issues, all the other issues, of course, anything that has an impact on you and your money on the Moneymakers next time. Till next time, bye-bye.